another management lined up for y'all, and that is Nexus Select Trust. And we do have the Executive Director and CEO, Mr. Sehgal, joining in with us on the show. Thank you so much, sir, for joining in with us this afternoon. And let me start by talking about the consumption growth, which is of around 12.5%, which is slower than achieved in the last quarter. So what's the outlook in terms of the next quarter, that's Q4, as well as FY25 on this front?
So I think first of all, it's important to understand that last year the base was very, very high, and we are coming off almost a 28% growth in the same quarter last year. So while yes, there has been a bit of a slowdown, the fact is that it's on a very, very high base, number one. Number two, we don't necessarily, give any advice for the next quarter. So all that I can tell you is that we are in line with our projections that we did at the time of filing the IPO. So we are actually in line. Our overall net operating income, which is the key measure, is up 14%. So we've done our highest ever consumption of 3,300 crores, and we have done our highest ever net operating income of 418 odd crores, which is 14% higher and in line with our projections at the time of the IPO. So very well under control in terms of projections. Yes, compared to a very, very high base, there has been a bit of a slowdown. Yes.
Very good afternoon to you, sir. The shareholders are joining in the conversation. If you could talk to us about your maiden acquisition of the 3 malls in South India, how is that coming along? And also if you could help us with what sort of a top line potential, and are you expecting also by when can we expect the acquisitions to get completed?
So the process is on. I think currently we are seeking approvals as required, and we are very hopeful that in the next couple of months that will fructify. In terms of total area, it's 1 million square feet, so it will be 10% more. We are currently 17 malls, that will become 20. We are currently 10 million square feet, so that will become 11. So that's 10% higher. And from wherever we see it, I think there is a huge potential to get an upside on those 3 assets as well. Those are under-managed, under-invested assets, and we should be able to see a pretty high upside on those as well. As you know, our model has been an acquisition-led model. All 17 of our malls currently have been acquired over a period of time, and we've seen very good turnarounds and good growths in all the assets that we have acquired. And we hope to do the same as we go into the final stage of acquiring these 3 assets as well.
Right. So also in terms of, overall the trend that you see, India is shifting towards premiumization in every category. So how is Nexus adapting to this?
Yeah, so I think that's a good point. Basically, 2-3 key trends are happening. The first one is that overall, I think as a price point, yes, you're right, premiumization is going faster than the other segments. But there is movement at every stage. Even at the lower end of the market, I think even in fashion, for example, I think there are brands that are doing extremely well. As far as we are concerned, we are repurposing our malls to take care of this. So wherever we find that, look, there are certain categories, like for example, the supermarket business has been slow, thanks to e-com and so on and so forth. So we have repurposed a lot of that area, and we have given it to new brands like Decathlon, etc. And it's a constant process to make sure that we're getting new brands in. A lot of international brands have come in, especially even in F&B. So there is Pret, there is a lot of other brands that have come in as well. So it's a constant process to move up the value chain. But we have to be careful that we have to do it by market, because we are now in 14 different markets and every market is different. So we have to be extremely careful that we are still relevant to that particular market and not going overboard. So, for example, we've just opened an H&M in Mangalore. And we would have thought, why H&M in Mangalore? But it's doing extremely well. So I think wherever the markets are ready, we are moving in with brands which are considered to be premium by the customer.
If I could ask you about how much of your area is now coming up for releasing, and also if I could add to that, are you seeing any price hikes on that particular front? And also, how much share do you get from retail and leasing segments when you talk about your top line?
Okay, I think you've got two, three questions in that. The first one is in terms of what comes up for leasing every year. About 10% comes up for leasing every year. And we get roughly 24% upside in terms of the releasing spread, which is what has happened in these 9 months as well. Last quarter, we have released 2.5 lakh square feet, and we roughly do about 10% of our entire area, which is about 1 million square feet over a year. And that gives us about 24% upside. So that's the first thing. In terms of where do the rentals contribute, obviously, the bulk of our revenue. In addition to that, there could be smaller areas of revenue like parking fee and common area maintenance, etc. But bulk of it, 80% plus, is actually rentals. And rentals are two parts. One is the minimum guarantee, which is typically 85% of our rentals, and about 15% is linked to sales, which we call the revenue share. So roughly 85% is fixed guaranteed rental, and about 15 odd percent is revenue share, which is dependent on the growth that we get in a particular month, quarter, or year.
Right, so thank you so much for joining in with us this afternoon on ET Now. It's a pleasure having you on the show, and what to expect from the company is also great to know. Thank you so much for that.